Okay, so we'll get to the special charts now and the some case studies. I just wanted to share with you Pete Skopinich's trading desk on his treadmill. He's got a $20 bet with Alexander Elder, the famous trading author and trader, of who's going to walk the most miles on their trading laptop. He's been using it for a couple of weeks. He says much improved trading, a lot less stress, better stress management, a lot more energy, and the ability to see more things. I'm thinking of getting one for work. That's a stand-up version, and I may do something like this for my basement. Really like the idea. So I wanted to share that idea with you. All right, so what this one is showing this was a case study we did in the chat room this week. It was on symbol SFUN, and the question was, as it was coming into this, coming back to the river and getting sideways up in here, should you exit right here, or should you wait and see? And so the first question I asked was, is the did you enter down around in here by these yellow circles? Any one of those three yellow circles is a logical place to enter. The first yellow circle is a entry after a nice move up, and then an orderly pullback and a regression line crossover, and it comes back to the Bollinger Band mean, finds support, and takes off again. You could buy the support at the middle of the river, and that's what Earl did. When the ribbon leaves the river for the second time, that's the second entry potential. Third potential entry is when it clears above the swing high of the previous price ribbon. You could look at this one around 27.85. So either like 27.45, 27.65, 27.85, any of those are reasonable entries in the regression line crossover after that first leg up. You could even get paid as quickly as somewhere up here around 28.10 if you saw that big spike up but it wasn't supported by the Bollinger Band. You might have elected to get out in here. Earl kept it, and so he was this thing went rolling over, and now what we got is a regression line crossover here at about 28.23, and now it's going sideways, and now his thought experiment was, well, what should I do with that? So when I look at this, this is what I see. All right, so the first thing I look at, comment number one here, is just a minute. The hound dogs are speaking. Shh, over there. The first thing that I look at is that I draw this pink line or this reddish line here at the ball. Excuse me. Let me get the dogs outside. Husky dogs, what are you doing? Outside. Not allowed to say when I'm working, guys. Come on, outside. Outside. Hey, over here. Outside. Come on. Come on, Huskies. Outside. Sorry about that. So the first thing I do is I draw this red line at the Bollinger Band mean, and I say, you know, after a regression line crossover, a normal thing to happen is for price to come back to the mean. That's what it's supposed to do. After an extreme move up, it reverts to the mean, and that's the Bollinger Band mean. So it could get to 28.12-ish. So if I decide I don't want to get out, where would I put my stop? The first thing that comes in mind is this bottom yellow line at 2810 is point number 2. A stop at 2810 would keep you in the trend if it comes back to the mean and then resumes. So if it were to drift down from 2823 and came back to 2812 and then resumed, that would be normal behavior. That would be the start of a third leg up. And that leg could be just as big as this one, which was an 80-cent move. So there would be reasons to say, hey, I would like to stay in this trade if I could, on the potential of gaining a third leg up. So this stop here would keep you into that kind of price behavior. The third point I make is if you put a stop just below the previous swing low here on the upper yellow line at about 28.20, it's only a 3-cent stop, but what that does is it would preserve the maximum amount of profit if in fact you get the expected move, which is back to the Bollinger Band mean. So and now the fourth point is, if you were going to put your stop then at 28.20 with a 3-cent stop, then you might as well just go ahead and exit and improve your position, improve your exit by 0.3 cents, and then have a plan to re-enter up here at about 28.32. So rather than mess around with 3 or 4 cents, why not just go ahead and exit here with the idea that you already know that you're going to re-enter at 28.32-ish. And you would do that only if you had done the range stat calculation from the low of the day and determined that if price breaks through 28.32 right after you sell, that there's still room to get a 2-to-1 reward to risk ratio on a trade to the upside. So that's my analysis of this particular trade. At this point, where you can see it's starting to chop around and go sideways, and the 30 has re-entered the river, and they're showing a little bit of weakness already. To me, the easier money is already over. It's coming back to the mean, and the next thing that would happen very easily is 30 or 60 minutes worth of sideways movement, and then it would become a sideways quiet channel, which again you could play the breakout somewhere around 28.32 or so. That would be a normal place for that sideways quiet channel to form. So if there's no advantage in being in this position, like I wouldn't buy this if I didn't own it already, but I would buy the breakout on the green line, or I'd be willing to stop and go short at 28.10 with the idea of it coming back to about 27.60 if that were to happen. So that's case study number 1, and that is where should I put my stop? If I'm still in this trade, where should I put my stop? And of course, everything depends, how big your position size is and whatnot, and where you got in. But to me, you should either be with a wide stop below the yellow line, or just go ahead. There's not much sense in putting this higher yellow line as a stop because you're only risking 3 cents. Just cash your profit, take a 3-cent improvement, and then decide if you're going to re-enter. Okay, so the next one we'll look at let's see if I can find that one. Okay, so this is symbol MLNX. This is also one from Earl. And the question is, where would I re-enter on this one? Where would I re-enter? And so this is this almost looks like the last one, where there was a breakout from sideways quiet channel. It went zooming up, and a breakout from sideways quiet channel, and then each of these yellow lines represent, or yellow circles represents important information. This one shows the regression line crossover that occurred. This one shows price ribbon entering the river and then resuming, taking out the previous high. This one is a new swing high on the ribbon that was contained by the 30-period regression line, and then a regression line crossover. And then the next thing that happens is it comes back and tests the mean. And then it gets all sideways quiet channel on us here for about 35 or 45 minutes. And now we've got this tiny little spike where it's leaving the river and the ribbon is leaving the river. And the question is, where would you enter here? What's a way to think about that in an organized way? So let's take a look at that markup. All right, so when I put my analysis on this, I see three choices on the entry, either immediately in position number 1, in the green circle number 1, because of a breakout from sideways quiet channel. Entry number 2 at about 50 would be upon breaking out, a penny higher than the previous ribbon swing high here in the river, and with the idea being that I would like to be in the position if it gets up to test 3 and then breaks through. Because what's going to happen is if it gets to 50 and a quarter and then gets above this previous swing high, it will be off to the races. Why do I say that? Well, because it had an extraordinary move up. It went from 48 to 50 and a quarter. So a 4% move intraday, and it may not be done. And there was absolutely no selling pressure on this whatsoever. It kept holding support at 49.75. So the idea would be that if it broke through number 3 with no resistance overhead, this thing could really take off. That's the argument for wanting to get position number 1 or position number 2, entry number 2 here. I would tell you that, in my view, that if you've done the range stat analysis and determined from the low of the day that there's still a 2-to-1 reward to risk ratio available on the upside, then any one of those entries is tenable. Obviously, the sooner you get in, the better it'll be if turns out to be brilliant, a nice trade. But you've still got a little bit of noise at 1. I think you could even do something is take a half a position at 1 and the second half at 3, and you'd end up getting a blended entry somewhere around entry number 2. But with only half the initial risk. That would be an acceptable trade-off. You could also just wait for entry number 2 to occur at about 50 and take that entry at that point. All of these then are feasible. They have different reward to risk ratios depending on where you put the stop. In my view, the stop should be this red line. And furthermore, at that point in the day, I would be looking at an automatic stop and reverse if it fails through the red line at about 49.70, with the idea being that because this run-up was so quick that a tactical move that you get a lot of guys who bought in here that are wanting to preserve their profit, and if they sell quickly, then that's going to drive price down pretty fast to 48.75. And then if it broke through 48.75, I might be tempted to put a second short on, with the idea of getting it down to 48. So this is a trade that is a sort of a classic sideways quiet channel, testing the new swing high. I want to be in the position as it blasts through that third green circle or that second green line. I don't want to wait for it to get above 50 and a quarter and then start chasing the entry, because that could be a runaway just as fast as this previous move the last time that it broke out and ran away. So to me, 1 or 2 is the preferred entry, but not later than 3. I would take any entry in here between 1 and 3, and then it would pay off pretty well if it blasts through 50 and a quarter. Let's see what else we got. The argument for buying in position number 1 on the breakout of sideways quiet channel is this one that occurred a little bit later that day. It's symbol SSYS, but it was really in the same kind of position. And this is one that goes from 87 to 87.60 in a matter of about 10 minutes. And then depending on how aggressive you are with your stop, you either could have just harvested that one right there for a couple R probably, or maybe an R if you had 60 cents on it, or you could be delaying. You could move your stop now up to the midpoint of the Bollinger Band, 87 and a quarter. You would do that if you thought there was reason to believe it could take out 87.70 and get higher. So either one, the aggressive exit that preserves the profit of the visible move, the second one that allows you to stay a little bit longer, and you just got to work on that yourself and decide what exit is going to be satisfying to you. Okay. All right, next one up. This was sort of a typical SVXY sideways quiet channel trade for me. I just want to kind of show the entry. The top chart is showing UVXY. The bottom chart is the inverse SVXY. And you can see that when UVXI was going up, SVXI was going down. The regression line crossover occurs here and here in SVXY. I waited for it to break out of the channel, so got it at 75.90-ish with a 30-cent stop, and then it moved about 28 or 30 cents in my favor. And right here is where I move it. I stopped at just above break even, so I'll make a little bit of money on the deal. So that you never know how far this is going to go, but it can move 7% intraday, and it hasn't moved anywhere near that yet. So that I feel like that's a good low risk trade. Very little open risk, maybe 6 to 9 minutes of open risk, and then you're just waiting to see how much you're going to get paid. Nothing wrong with that. This is one in TNA. Happened shortly thereafter. We had sideways quiet channel on the left-hand side of the blue line, and then we got a breakout here. So entry at 70.42. A 30-cent stop is way down here. Looks incredibly wide, doesn't it? And now by the time here it gets up to 70.63, you got 0.6R in hand. And on that day, I didn't mind moving my stop to here, and so the worst that's going to happen to me is a 0.5R win, and I'll take that one every day, all day. This one is from January 11th. This is UVXY. This was the opening at the yellow line, or at the blue line, excuse me. It horsed around here a little bit up, then down to the mean, then back up. What I want to show you is my entry on this one. And let's see here. So what I looked at on this one early in the day was this was the moment when trending behavior first began, because now you have the price ribbon, you have the 10 period, and now finally the 30 period moving average have all left the river. That's the beginning of price trending behavior, and so I like that entry there at about 14.54 or 55 with a 30-cent stop, which you see puts down right at the bottom of the river. Okay, so an early morning entry, and that one played out pretty well. All right, this one shows a combination trade. This started off as a UVXY trade on the right-hand side here. This was an entry at 14.55 with a 30-cent stop. I wonder if that was the same one. Yeah, in fact, it was. That was the previous trade that I just talked you through, where we took the entry at 14.55. It went up to 14.65 and then rolled over. Got a regression line crossover here, and I exit at 14.55 when price comes back into the river for a scratch trade. And then that triggered a switch over to TNA, which I now enter at 70.60, and I put my stop here. This one was a 25-cent stop below the swing low of the ribbon. And now on this one, I'm really thinking 71 is a reasonable profit target on that trade. So this was a routine scratch on UVXY, and it got directional on me and went the other way, so just stop and reverse. and I like TNA on this one better than SVXY. It was starting to move a little bit earlier. Now this is one that Earl picked in the chat room. He asked us to take a look at DK. They had made some money on this over the last couple of days. So this one is also a 3-minute chart, but it looks back 2 days. And I want you to notice 2 days ago was a sideways quiet channel, and then you get a breakout from that right about here. And then Thursday was all up. You almost couldn't get a bad entry. And now on Friday, he was looking at this one where you had a gap up. It pulled back, held above the mean, breaks through the VWAP, leaves the river, and he gets an entry somewhere around in here at 28 with about a 30-cent stop. And you get a really nice move up here into the and this was just into noon. So this is a case where the sideways quiet channel here on day one, sideways quiet channel on day one. Oops, let me get a better pen color there for you. So on day one, this breakout from sideways quiet channel, this could be core plus turbo. And so you sell your overnight or you sell your intraday position, hold just with overnight risk, re-enter somewhere in here where it's starting to behave well, or even waiting this long. And then you get a nice run up all day. You sell off your turbo, you keep your core piece overnight, somewhere around in here or here. You get your re-entry of your turbo position, and that thing just keeps going. So that's sort of a continuation pattern, and why it pays to look at some of the higher time frame periods. And this is also an argument that you can look outside the Dow 30. I just happen to like the Dow 30 for convenience, but the DK actually was a 5-day down trade for him, and he found that one and was able to get a couple good days of directional trading intraday out of that one symbol. So that's why you can make an argument, what I call staying connected to symbols that are working for potential continuations. And then the last point is that a sideways quiet channel can often lead to a pretty nice swing trade, which you can play one day at a time. So that one's not all bad. This is the use of a the regression line crossover framework, I'll call it. And so what we're looking at to frame a swing trade. And I'm stalking Cliff's Natural Resources here, CLF, one of my favorite traders. And the reason I'm trading it is because it had a sideways quiet channel breakout from here, and when zooming up, all the way up to 40, it went from 36 to 40 in a matter of a day, and that's a 10% move. So that's one of the reasons I like trading Cliff. And then it had a pretty harsh sell-off, and then a sideways quiet channel, then a gap down, and now it's finding support at the same place it found support last time, just before its 10% breakout. And so I'm stalking this one because I think if it breaks down, let's see here. If it breaks down below this congestion zone or this support level here, it's going to be a big move to the downside on failure. But if it holds here, which it is showing some desire to do so, you can see in this other blue circle, that's about where the regression line crossover is going to occur if it continues to hold right here. So this could very easily get us an entry here and a potential move up back up to 40. So I call that coming around into the wheelhouse once again. Okay, so that's a half a dozen case studies. I will get this video processed and hung for you. I think we're in really good shape on the long side for continuation trades next week. There's quite a few symbols that are looking good, and I think even some of the value plays are coming around. And I would say that the strength in the U.S. Is starting to come back, and so this might be a natural time for guys that want to preserve their European profits to roll back over to the U.S., which looks better on a value basis. And so maybe it's time for the U.S. to start taking the lead once more. I'll be ready to preserve profits in the overseas positions and roll them into U.S. gains as you were, as if we see that happening. The financials are leading the way right now, but you've got some selected tech that are doing well, like Cisco and United Tech. And I like how Hewlett-Packard has bounced off the bottom already and made a nice 20% move. So I think there's starting to see some green shoots now inside the U.S. Okay, so that's everything I wanted to cover today. And I'll see you in the chat room. And congratulations to the mighty Leavenworth Thunder. The girls and their divisional championships, and played great today. So take good care, and I'll see you in the chat room.